Okay, sorry, I'm late by 5 minutes. Today we see the exercise number 34. Okay, you see the exercise number 34. In the exercise number 34, from the following information furnished by Mr. Raj, who keeps his books under single entry system, prepare trading profit and loss account for the year ending 31st 12/94 and balance sheet as on that date. They asked to prepare the trading profit and loss account and balance sheet. Okay. Then first point you see here, he sells goods only for cash. He sells goods for good. He sells goods only for cash means there is no credit sale. Where there is no credit sale, there is no debtors account, there is no bills receivable. No debtors, no bills receivable. So there is no need of preparing the debtors account and debtors account and bills receivable because all sales are on cash base. Okay, remember this. And selling price which is 20% above cost. Selling price is 20% above cost. 20% above cost means whatever they purchase, for that they add 20% on cost. 20% on cost and add the gross profit. Okay. So these 2 points, this 20% profit is the gross profit. This is the gross profit you have to add in the, or you have to show in the trading account. 20% is the gross profit. Okay. You calculate the cost of goods sold, 20% above the selling price. 20% above the selling price. I'll show by 2 ways. Okay. Remember this. First is cash sale. Second is selling price is 20% above cost. Okay. Whatever purchases they make, on that they add 20% profit and fix the selling price. Fix the selling price. Remember this point. Okay. So you have to calculate the selling price or you may calculate the total sales. Remember this. Whatever sales. Then next is deposits. He deposit all the takings into bank after deducting of his salary. Whatever cash sales he makes means after selling the goods, whatever cash he receives, all the cash is deposited in bank. Okay, deposited in bank. After deducting of his salary, trade expense and private expense of the trader. After deducting these three means these three are to be shown in the cash book. He deduct of his salary, trade expense and private expense. Three items he deduct at the end of the month and total amount is deposited in the bank. Okay, so these three item required amount is kept in the cash book. These three expense or item required amount is kept in the cash book, remaining is deposited in the cash. Therefore, it is nothing but you have to show these expenses, three expense in the cash book. You show these three expense in the cash book. And retaining cash balance rupees 500. You see here, he deposits all the cash in the bank except amount required for office salary, amount required for trade expense, amount required for his personal expense, and keeping 500 cash balance. Cash balance means closing balance, closing cash balance, 500 rupee. Okay. These are the points you may record in the cash book. You record in the cash book. And at the end of each month. Okay. The payments made out of sales proceeds. The payments made out of sales means out of cash book. Office salary 2,300 you take in the cash account and go to P&L account. Then trade expense also you take in the P&L account, sorry, cash account and P&L account. Okay. Then private expense is there, that amount is question mark. This is the point you have to ascertain. Question mark is there, you have to missing, this is the missing information, you have to ascertain this amount. Then analysis of bank account is given below, and you see the bank account. This is the bank account of the trader. This is the bank account of the Ali. Then disconnect Malay. Sorry, internet problem. You see here, this is the cash book. Opening cash balance, opening bank balance, this goes to opening statement of affairs. Then monthly deposit here is deposit. This is the receipt in the bank account. This is to be taken in the cash book payment side. It is the payment for the cash book. Okay. This is the contra entry. Contra entry. Bank account, debit side, cash account, credit side. Okay. Then creditors is here. You take in the creditors account to bank. And insurance goes to P&L account, debit side. Rent and taxes goes to P&L account, debit side. Furniture is here. This is the asset, goes to balance sheet. Closing bank balance is here, goes to bank account. Oh, sorry, balance sheet. Okay. Then the assets and liabilities for the 1194 is given. 1194 balances. 1194 balance is nothing but it is the opening statement of affair. It is opening statement of affair. First creditor goes to creditor account opening balance. Capital goes to balance sheet. Cash in hand goes to cash account opening balance. Okay. Then bank account goes to bank account opening balance. It is already taken here. You see here, 5,000 is there already. Okay. Then premises goes to balance sheet. Patent goes to balance sheet. Then on 31st March 2012, 31st 12, 1994, stock at selling price is 4,200. Stock is given at the selling price. Remember, my dear friends, according to accounting rules, stock is to be shown at cost price or selling price, whichever is less. Remember this. Cost price or selling price, whichever is less is to be shown in the account. But this is the 4,200 is the selling price, and this is ascertained after adding profit. Therefore, cost is less. Therefore, you have to take the cost price in the account. In the account, you have to take cost price. Cost price is less. So in this amount, 20% is the profit. 20% is the profit. Means for every 100 rupee cost, we add 20 rupees profit to ascertain the selling price. Remember this. I once again repeat. For every 100 rupee, cost, we add 20 rupee and ascertain selling price as 120. Selling price is 120. Okay. Therefore, when 120 is the selling price, 100 is the cost, but 4,200 selling price. Again, there is an internet problem. I'm sorry for that. I'm disturbing you. And after the class, I'll upload the video. It is because of internet problem, my dear friends. Okay. So the cost is to be ascertained. Cost of closing stock is to be ascertained. Cost of closing stock is to be ascertained on the basis of 100 is the cost. Hundred is the cost. If 100 is the cost, 20 is the profit. Then selling price is 120. So for every 120 rupees selling price, 100 is the cost. But for 4,200 selling price, what is the cost? In proportion, I'll calculate the cost price of this. Okay. Then creditors 38,000, it goes to creditor account closing balance and then goes to balance sheet. Prepaid insurance is to be deducted in the P&L account, insurance item, and rent outstanding is to be added in the rent P&L account, and then you have to take in the balance sheet. Okay, this is the point you remember. Now I'll prepare the required accounts. First, opening statement of S is here, no problem. There is no need of preparing opening statement of A. Then second is cash book. In the cash book, bank account is given. Bank account is given. You have to prepare the cash account. Then regarding the debtors and creditors, debtors account is not essential because there is no credit sale. There is no credit sale. Everything is on cash sale. Okay. Then you open only cash account and creditors account. Cash account and creditors account. Then come to the finalization. Okay. You see here. This is the cash account, then creditors account. Two accounts I'll open. I'll open the two accounts. Okay, one by one I'll enter the transaction. You see the transaction. First paragraph is related with the account. Second paragraph is selling price 20%. Third, B point. In the B point, all cash is deposited in the bank except certain items. And at the end of the year, 500 balance they maintain. 500 balance maintain the cash book. Therefore, you take that. Buy balance carried down 500 rupee. Closing balance they maintain 500 rupee. Okay, you take that 500. This is in the B point. I completed the B point. Then go to C point. In the C point, there are payments. There are payments. I will take the payments. First payment is office salary. Salary 2,300. Trade expense paid out of cash is 1,000. Then personal expense. Personal expense I'll record as drawing. Personal expense is drawing. So I record as drawing, but amount is question mark. Amount is question mark. I'm helpless. Okay. Then come to the cash book. Sorry, bank account in the problem. In the bank account, debit side there is a contra entry that comes in the cash account credit side by bank 75,000 contra entry, cash deposited in the bank 75,000. Then in the credit side there is a creditor. That creditor comes to debit side of the creditor account 42,000. Then insurance is there, rent is there, furniture is there. This goes to P&L account and balance sheet. Then come to the opening statement of affairs. Next E point. In the E point, statement of affairs, Creditor is there, opening creditor. So you take as opening creditor. Buy balance brought down 10,000. Buy balance brought down 10,000. Then capital goes to balance sheet. Then cash in hand is there, you take in the cash book. In the cash book, you record to balance brought down 500. Okay, I forget to take the amount. I'll write the amount afterwards. Okay. Then next is F point. In the F point, closing stock is there. That goes to trading account and balance sheet. Creditor, you take closing creditor 38,000. You take the closing creditor 38,000. This is the point. You remember closing stock creditor. Prepaid expense outstanding goes to P&L account and balance sheet. Okay. This is the point completed. Then we have bank balances, cash balances, 500 rupee I recorded opening balance. This is the information. Problem completed. Problem completed. Now I'll show you by two ways. Here also I calculate the value of closing stock. Value of the closing stock. You see here. I close the creditor account. Creditor account total 80,000. 80,000. Difference is 70,000. Okay. This difference is credit purchase. Okay. Credit purchase means total purchase during the year. Total purchase during the year means cash purchase, credit purchase. Cash purchase is not in the cash book. There is no purchase in the cash book. It is only purchase. Okay. Then you have to calculate the sales for the year. Here I will calculate the sales for the year. Okay. What is the selling price? 70,000 is the total. 70,000 is the purchase. There is no opening stock in the opening statement of face. There is no opening stock in the opening statement of fair. Therefore, this is the opening stock plus purchase minus closing stock is the cost of goods sold. In the previous problem I solved. Okay. Opening stock plus purchase minus closing stock is the value of cost of goods sold. So you calculate the cost of goods sold and then calculate the selling price. Okay, you see here. Cost of goods sold is equal to opening stock plus purchase minus closing stock. Okay, opening stock is not there. Therefore, I'll take purchase only. Purchase minus 4,200 is the closing stock. 4,200 into 100 divided by 120. How I taken this? For every 100 rupee, cost, 20 is the profit, then selling price is 120. Okay, for every 120 selling price, 100 is the cost, then for 4,200. Its answer is 70,000 minus 3,500 is equal to 66,500. 66,500 is the cost of goods sold. Okay, cost of goods sold. On the basis of this, I'll calculate the credit sale. So credit sale I'll write here in the cash book. Sorry, cash sale, not credit sale. Cash sale, only cash sale is there. I'll calculate cash sale. This is the cost of goods sold, 66,500. This is sold at a profit of 20%. Okay. So I'll calculate here 66,500 into 120 divided by 100. 120 divided by 100. You see here to calculate cost 100 divided by 120 I taken in the selling price. To calculate selling price, I made the reverse. For 100 rupee cost, 120 is the selling price. 66,500 cost. What is the selling price? What is the selling price? You see this point. This is the cost. 100 is the cost, 120 is the selling price. For 66,500, what is sales? So sales is 79,800. 79,800. In this way you calculate. Otherwise you come from the trading account. From trading account also you can come. Here also Here one type of calculation I shown here, another type of calculation I will show in the trading account. Okay, now you see the position in the trading account. I will close this account. Total is 80,300. Then total 80,300. Difference represent one missing item is here. What is this missing item? Missing item is drawing. This drawing is missing item. Therefore, 80,300. The difference is 1,500 is called as drawing. Okay, private expense. In this way, you have to move. Clear? Then you see the trading account. Now we go to trading account. This is the trading account. In the trading account, there is no opening stock. There is no opening stock in the opening statement of fair. Directly I take the purchase. That purchase is credit purchase, 70,000. Okay. Then there is no wages, no manufacturing expense, no other expense related with trading account. Directly I go to credit side. In the credit side, first is sales, but sales is unknown. Sales is I don't know. I don't know the sales. Okay. Therefore, closing stock is given. Closing stock is 3,500 I taken. How I taken 3,500? I'll calculate here. You see the calculation. 4,200 is the sales cost. Value of closing stock selling price into 100 divided by 120. This is the value of closing stock. For 120 selling price, 100 is the cost. For 4,200, its selling cost is 3,500. Okay. You take the selling price. Then next you have to take the, on the basis of these two, you have to calculate the gross profit. Gross profit is equal to, next point, gross profit. Gross profit is equal to 20% on cost. So you calculate cost 20% here. Total is 70,000. Purchase minus 3,500. 3,500 is the closing stock. Out of 70,000, closing stock is 3,500. Means 70,000 is the purchase, 3,500 is the balance, sold value is this much. Into 20 by 100. Into 20 by 100 you calculate. 70,000 minus 3,500 means 66,500. 66,500 into 20%. That is, item is 13,300. 13,300 is the net profit. 13,300 net profit you take. You can note down this point. Okay, 13,300 is the gross profit. You close the PA, this account. The total is 83,000. So 83,000 is the total. Closing stock, this is amount, this much here. Then difference. This difference is called as sales. This difference is called as sales. Okay, this is sales. And this sale you take to the cash book date. In the cash account debit side. In the cash account debit side, you take this sale and close the cash account. Then you will calculate the drawing. In this way you can go. Otherwise, you follow the previous method. At both the ways I explain to you people, which is easy to you, you follow. This is the trading account. Okay. Next, I'll go to P&L account. I'll go to P&L account. That is the cash sale. I recorded there. Gross profit is 13,300. Then insurance is 2,000. Less prepaid 200. Balance is 1,800. Then you take the rent and rate 16,000. Add outstanding 1,000. Balance is 17,000. Okay. Next, salary is 2,300. Then trade expense is 1,000. You close the account. Total is 22,100. Then there is a net loss of 8,800. Okay, only 1 minute time is there. I'll complete within 1 minute. Now you see the balance sheet. In the balance sheet, you take the opening capital 20,000. There is no addition. There is no addition. You deduct there. First net loss 8,800, drawing 1,500 from the cash book. So total 10,300 you deduct, 9,700 is the capital. Then creditors balance 38,000. Next is outstanding expense 1,000. Outstanding expense 1,000. Come to the asset side. Cash account balance 500. Bank account balance 15,000. Then stock, closing stock 3,500, not 4,200. You take the cost value. Then furniture from the bank account. Then premises from the statement of fare. Patent from the statement of fare. Prepaid insurance from the P&L account. You take this and close the account. 48,700 is total. Once again, you repeat this in your home and you watch the video once again. Time is over and we'll see tomorrow one more example. And tomorrow I'll complete this chapter. You have to solve the remaining problems. Because of internet problem, I disturbed you.